So now what we'll do is we'll just look at the 4-hour chart and just look at just a brief examples of this in action, just so we can get a good idea of how this all works and really just understand things a little bit clearer. So what we can see if we just look at, again, we've been using this as an example in the past videos, so we'll just continue looking at this and we'll start just at this section here. So what we can see is we have this impulsive structure, we have this move, this is what ultimately breaks structure, and we flip from daily bearish to now bullish on the 4-hour chart here. And what we can see is we do get equal highs. We know that from a liquidity standpoint, equal highs are more than likely going to be run. And what we can see, if I just zoom in a little bit more, is that we have equal lows here. What happens? We sweep the equal lows. Great. So now we've taken liquidity. Our next step would be to look at the structural point or the previous high, and then we ask ourselves, is this low successful in breaking this high? Yes, it is. Has it taken liquidity? Yes, it has. Therefore, this is a protected low and in theory should not be traded below at this stage of price action. So if we move on now, we can see that we have this impulsive leg that breaks structure. We create a high, we have structural liquidity that would rest just above here. So what I'll do is I will just draw this on so we're a little bit more official in how we're going about things. And then what we can see is we do in fact get a change of character where we break the high and then we break a more intermediate low. So now what we can ask ourselves is this a protected high? Now initially you would say yes, based on the fact that we took liquidity and we broke structure and continued to create that change of character. But one other thing that we need to be aware of, if we just think of the initial protected and targeted structure video, is this high successful in taking out swing structure? This isn't swing structure. This is swing structure. This is also a protected low. So is this high successful in taking out this low? No, and we can see that as we start to pull back. Initially, we do get some sort of mitigation, and this is where we might start to think and believe that maybe we are starting to see the opportunity for this high to be protected and that we would run this low. So when we're seeing this bit of price action, we get that change of character. We're starting to see a mitigation. But then what do we see? We just see a sweep of liquidity. So we'll just take this off. See a sweep of liquidity right here, this structural liquidity, and then what do we end up seeing? So what I'll do is I'm just going to draw on all of the lines just so that it's super clear. So yes, we do get a change of character. Put that one up as well. So we have our liquidity, we have our previous high that we break, get that change of character, and we move to the upside. Here, liquidity, change of character. We fail to take out this low. Price continues. We do get some sort of mitigation, so we're starting to see the potential that this could be a protected high. But what we need to see is follow through on this move right here, because what we're going to see if we're going to have a true protected high, and it's something I probably should have mentioned in the beginning of the video, but considering we're still in the same video, it's not a big deal. So now we have that change of character. We've taken liquidity. What we'd want to see now is a mitigation and then a continuation that takes out the structure that created the actual swing in price. So if I just draw on, let's make this a little bigger. So if I just draw on this, for instance, parabolic price action, move this out here. So what we want to see is we want to see price breaking this low, because this, as we can probably all agree, is not really a clean or clear swing point. Yes, it does move 34 pips, but it's more of a pause in the market. I touched on this in the previous videos. It's more of a variance in the price action. But if we're just looking at it from this perspective, what do we get? We get the beginning stages of it where we get a mitigation. We have our change of character. What we need to see is price continue to the downside. Then we could really say that this is a protected high. Until then, it's really just more of taking out external range liquidity. We're getting a pullback within the range itself, and then we see a continuation. So that's one of the most important things that we need to see is, if we're looking at protected and targeted lows, is the fact that we get that mitigation and then it breaks true swing structure. the end of the day, it comes down to swing structure. If we're looking at clean and clear protected points being created. And really at the end of the day, if this is a little bit confusing, we just need to ask ourselves from the previous video, is this high successful in taking out this low? No, therefore this will be targeted and this is still protected. And then what we can see if we just continue moving on is that price then breaks to the upside. What we can see is we do have some liquidity again. So we're just looking at price action with the lens of what is actually happening now. So we've been able to derive that this is a protected low because we've taken liquidity and we've broken the previous high, the previous swing structural high. Then we continue to the upside. We've taken out liquidity. And what we can say is we've taken out liquidity, we've created a new high, but have we seen a change of character? No, we haven't. This is just one clean impulse. We don't have a little pause that we can start to look for changes of character. So again, we just continue on and we start to look at this as a potential point of liquidity. Now we ask ourselves, we've broken structure, we've changed character. So what does this mean? It means that as of right now, we can start to say that this is a protected low. So what we can say is we've taken liquidity, we've seen that change of character, so we can gauge that as potentially a protected high. But we need one more thing to happen for this to be considered fully protected. We need to take out swing structure. We need to take out clear targeted lows. And what we can see is, if I just put this on here, although we do wick it, we don't actually break it. So yes, we have taken the liquidity that rests below this protected low, but at the end of the day, we don't close below and we continue moving to the upside, which when we look at this is why we end up trading higher. So at the time, of course, we're going to be looking at this as a protected high, but as we start to see price moving up, especially just looking at the momentum that is being created, and what we said earlier is that this would more than likely be some sort of demand zone that would hold a fair amount of relevance as to what we'd be looking at, especially because it's sitting right at the origin of the move. It's a protected low. If we're just looking at it from all of these perspectives, we can see that we take liquidity, we break structure, and in theory, yes, we do mitigate something. This is a form of demand. It breaks minor structure and takes liquidity right here. So we have a lot of confluences as to why this would be a valid and strong demand zone, pair with the fact that it is a protected low. When we see this reaction, initially it's not a great reaction, but then we get a change of character and then price begins to move to the upside. And from there, what we can see is we now create a new high. So what we can also say is when we look at this bit of price action, before we continue here, I got ahead of myself, is we create liquidity right here. What we can say is we create liquidity right here. We also have liquidity here. What we can very clearly see now is we have lows right here. And what we can see is, yes, it did take the liquidity of the previous protected low, but we didn't break and close below it. But what do we get now? We get a change of character, price moves, and we take out another high. So what we can say is, was this high successful in breaking and closing below this low? No, it was not. Was this low successful in taking out this high? Yes, it was. Did it take out liquidity? Yes, it did. It took liquidity here. It took liquidity here. Did it react off of a demand zone? Yes, it did. That's just an added confluence in how we can use protected and targeted structural points. And then what we can see is when we just move on further, we have equal highs. Yes, this does, if we look at it a little bit more granularly, we have equal highs even just right here. So we begin the process once more. So now that we've taken the liquidity of these equal highs right here with this wick right there, we get a change of character and we start to shift from bullish to bearish on more internal structure. If we are going to classify this as a protected high, what do we need to see? We need to see liquidity being taken, a change of character, and the previous swing structural point, the low that created this high, to be taken. Now what do we see? We see that price does not take that low and instead moves to the upside. Now this is where we can ask ourselves, how are we going to know if this high is going to be protected and this low will then turn targeted, or will this low remain protected and this will just be a targeted high? Well, like I said, we have almost everything we need here. We almost have every criteria, every bit of information that we need. We just need to take out the structural point. We have a lot of range, and I'm sure if you were waiting for demand to be tapped here, once price reacts off here and continues to the upside, you're sitting there scratching your head wondering what's going on. This is where it becomes very important to start mapping out potential reversal points. We know we have two. And what we can see here is we break structure, a little bit more internal structure, because again, we have a swing point here, swing point here, swing point here. So we're doing something like that. So we're really waiting for this high to be broken, this swing high to continue the bull trend. But again, what we know about internal range liquidity is we're waiting for internal range liquidity to be taken. Those are early indicating signs that price is going to continue to the upside. And although we haven't fully spoken about it just yet, we also have right here a supply zone. The supply zone fails, it flips to demand, it creates a demand zone. So we have another solid indication of a demand zone. So we've broken structure and we've done a supply to demand flip. And what we can say is if this high was to actually be created as protected, we would expect this low to fail. Therefore, this demand zone would not even be respected in the slightest, or we'd get a very small reaction and then price would continue to move to the downside. But as we can see, that doesn't happen. So this is an initial interpretation of what we can begin to be looking at, because initially, if I just go to bar replay mode here, when we look at this, we get a change of character. We look at something like that where we get some sort of rejecting or reaching candle, more so probably reaching because we haven't actually tapped into the demand level. At this point, we don't really know one way or another if this is a protected high. We have a lot of the criteria, but what we can see is we're starting to get a little bit of resistance to moving to the downside. We're seeing a lot of demand entering the markets. And if we know demand and the refinements that we can use, we can see that we have these wicks right here. And if we just look to the right, demand held right here, which was our initial change of character. So the initial change of character was not successful in breaking structure on its first move. What we can see then, price moved to the upside and then moved back to the downside. We tapped into a new level of demand and then we seen a reaction once more. Then we get one more reaction. And then this is where price begins to struggle. And at this point, we don't really have a clear indication of what's really happening. We can all be honest on the 4 hour. Of course, we can start to look at lower time frame. We can look at a 15-minute and we can start to look at our price action and say, okay, well, we've broken structure to the downside. So now what we're seeing is we've taken all of this liquidity. We have a swing point here. What do we end up doing? We break that swing point. What does this create on a 15-minute? This creates a protected low on the 15-minute. And then if I continue price, will this 15-minute get targeted or will it remain protected? And we continue to the upside. And this is where looking at timeframes can be incredibly important. But if we just look to the left and say, hey, Brad, just a second, we broke structure, we took liquidity. Wouldn't this be a protected high? Let me just zoom in just a little bit because this one caught my eye and I know there's probably a few people thinking about that. What we can see is price broke structure to the downside. We broke structure to the upside. We just have almost this bit of price action. So yes, we do get a change of character. But we have to ask ourselves, where is this change of character coming from? Where is this protected high coming from? It's coming seemingly out of nowhere. Look at what sort of reaction we have. We basically just tap into a demand zone, this entire pivot right here, and then we move to the upside. And man, we have a lot of drawings on the chart right here. What we can see is it is a protected high by definition, but this is where the 15-minute and the 4 hour start to need to be read together. Because yes, as we're looking at price moving to the downside, if this demand zone fails, then yes, this 15-minute high should remain protected. But what do we see? We see this demand zone getting respected, and then we start to see a 15-minute protected low, and then we start to see price action shifting. We start to see demand taking over the market. We start to see price moving to the upside. And we start to see that interaction between supply and demand, because initially, if we just look, supply is holding. We're starting to see some demand holding, supply holds, and then it all just becomes liquidity, internal range liquidity. And then we move to the upside, we break through, which then confirms our protected low, and price continues moving to the upside. So we'll go back up to the 4 hour now. And what we can see if we just play price on, and this is how we start to begin to understand or predict whether a higher or low is going to be protected. Because like I said, when we were looking at this, we didn't really have any indication whether one was going to be protected or one was going to be targeted. We had most of the criteria. And of course, it's all well and good to say that this is protected and that this low is going to eventually be targeted. But if we look at the move between that, it's about 170 pips. You want to trade down, you want to trade up, you want to trade anything and everything that you can in here. There's opportunity everywhere. So why would we wait for certain things? And this is why we can then start to make reasonable trading decisions based on that. Because yes, if we create a trade idea up here that this is a protected high and that we would be looking to eventually take out this low, we know that this demand exists. So if we look for trades within this area to at least target this demand, that's great. But then what we also know is that we haven't actually completed this to be a true protected high yet. We know that this is a protected low. Therefore, we can still look for demand reactions. So even if we have a sell here and we take a buy here, we've hedged ourselves. So therefore, if this high does become protected and we take out this low, your sell is in really good shape. Yeah, you might take a loss or a break even on the buy. It's not a big deal. On the flip side, you would take a loss or a break even on the sell, and these buys would be good if this demand holds and that this low is to remain protected. And what we can see is if we just look at this, we'd be looking at supply zones in and around here. We can see that this supply zone fails. What do we end up doing? We create a demand zone. We just keep playing price forward, and what do? We break. And what we can see is we disregard supply. Why? Because we've already begun to respect demand. We've now been told on a lower time frame, that 15-minute, that down here, we created a protected low, and we started to see the follow through within that bit of price action. So we'll just look at this, and what we can see is this price action carries on. See that we take the liquidity here, we start to pull back. Where do we pull back into? We pull back into a demand zone. We don't actually get a true change of character. Now we have a new bit of liquidity. And again, like I said, I will do this with actual lines and not just drawings so that it's a little bit clearer. We have liquidity right here. You can see if I just draw this on as well, we have a demand zone. We tap into demand and we continue moving to the upside. And what we can see is we haven't created any form of real change of character. Again, if we look at it more fractally, we can see that yes, we did create a change of character right here. There's our mitigation, but was this high successful in taking out this low? No, it was not. And more specifically, this low. Because even if we look at this fractally, we take liquidity, we move to the upside, we break this high. So what does that give us? Which is the whole previous tangent. We have a protected low right here. So if this high is to actually become protected, we'd want to see price break below that. It does not. It reacts to demand. Again, similar concept where we react off of a demand zone or some sort of pivot in price to hold price bullish in this case, and price continues on. Clear that up. So then what we can see is we break structure to the upside once again. We take liquidity. You can see that we have a little bit more of a change of character right here. But ultimately, what do we end up seeing? Price breaks to the downside. We've actually violated structure. So this is a first indication. Of course, like I said, that we have a protected low here. So what we want to see is that protected low being broken, but we also want to just see swing structure. The emphasis is on swing structure and protected structure, because right now we have a lot of protected points, but this is now starting to stack liquidity, and this is what these protected lows start to become. We've seen it right here, where what ends up happening with this protected point, we took the liquidity. What was that? That was internal range liquidity. And as we know from the previous videos, is what did this all end up becoming? It all became a liquidity void that we ended up filling. And that's how we begin to use previously established protected lows in this case, as these are now becoming forms of liquidity. So what we can see is now, because we broke that swing structure, we now have a protected high. Now what we want to see is some sort of mitigation. We get a mitigation, price then moves to the downside, and what do we get? A new break of swing structure. Now what we can ask ourselves is, does this high right here create a true protected high? If we look at the previous definition of a protected high, it would be, was this high successful in taking out this low? Yes, it was. So in theory, yes, we could. But we can also look at it again a little bit more granularly, and we can see that we have structural liquidity right here. Again, I'll use a line instead of my squiggly drawings. We have structural liquidity, which provides us a change of character. We also mitigate a previous supply zone, which is also created from a protected high. This high was successful in taking out this low. Therefore, what do we have? We have another protected high. And then what we can see is price then continues on. And what we can see is we do end up dropping, as we can see. But if we just look at continuing on this, we have the demand zone here. This was our first indication that this high might actually be protected. This demand zone, what does it do? It just blows right through it. We totally disregard it. We take the liquidity above it. What do we end up seeing? We start seeing supply chains starting to happen, where we tap into a supply zone, we drop, we've now broken structure, we've established that this is a protected high. We start to pull back. Now we know that this high is protected or likely to be protected now that all of the additional pieces of information have been established. And what do we see? We have a supply zone here where we tap into that supply zone right here. We also take some of the liquidity. If we just match, we now have equal highs right there. We can even say that there's a supply zone in this wick that doesn't quite get tapped into. However you're drawing it, we have a range. You can see that if I can draw straight, but we have a supply zone. Whether you use the supply here, use the supply here, what we can see is we get a mitigation and price continues moving to the downside. Again, we can ask ourselves, is this a protected high? What we can see is we take liquidity, we have a change of character. More importantly, we take swing structure and continue moving to the downside. This high was successful in taking out this low, therefore it becomes protected. And if we want to take that a step further, we have demand in these wicks. And if we just look at it like that, what does this wick do? It breaks demand, therefore it gives us an early indication or an early warning sign that the demand at its current level is not able to sustain or hold the amount of supply that's coming into the markets, and that we can start to really gauge that this low is more than likely going to be targeted. That's how you begin to predict if a low is going to be targeted because a newly created high is becoming protected. And then what you can do is that final point is, as we'd see, is this would be a demand zone. Look what ends up happening. We just totally blow through the demand zone, create some liquidity, but the biggest indication or early warning sign is we took liquidity, we changed character, we broke through the most recent demand zone. Why is this a demand zone? We take liquidity, we break structure, we move to the upside. Again, this is a little bit more fractally priced within this 4-hour leg, but this is how we need to be using and looking at market structure, looking at supply and demand, is understanding what we're seeing on the higher time frame and what we're seeing on the lower time frame, building that story from the top down and understanding everything so that we can make the most informed trading decisions. Because right now, all we're really talking about is direction, understanding where the market is likely to go, using liquidity to vet out whether a high or low is protected because it's sweeping liquidity. Then we're using supply and demand as our interpretation of whether or not momentum is going to continue or we're going to start seeing something else happening. Because if this demand zone was going to hold, then chances are what's going to happen is we're going to target this high and then we're going to start to see bullish price action. But what ends up happening? We disrespect the demand zone, we break right through it, and then we end up breaking swing structure. So once we see this, if we go into the 1 minute, you're going to find a trade there, guaranteed. Now, whether you position yourself within this wick or traded more of the reaction to demand failing, that's entirely up to you. But this is the basis of how we're looking for trades. We're looking for structure. We're looking for liquidity. We're looking for direction. We're looking for supply and demand to show the interaction. And then what we can see is as price continues moving down, what are we now looking at targeting when we're starting to see shorts coming into play? We're looking at the previous forms of protected lows. What we can say is this one gets disregarded completely. This one here, we get a little bit of interaction, but ultimately price just continues blowing through it. This one, we get a little bit of interaction and then price still continues blowing through it. We can start to look at other forms of protected lows that are down here, but at the end of the day, once we start to shift and once we start putting in more protected highs, we're going to use all of the previous protected lows as liquidity. But before we even talked about that concept, we talked about structural liquidity, and we were able to identify this as liquidity. We were able to identify this as a liquidity void. We didn't even know about the potential of those being protected lows. So this just adds a further level of understanding of what we're looking for once sentiment starts to change. And it's no different that when when and if price starts to move to the upside, where are we going to start looking? We're going to start looking at protected highs as forms of targets for our trades. And that's how we should be building our trade ideas. Be looking at momentum, looking at liquidity being taken, looking at demand failing when we're looking for shorts, or supply failing when we're looking for buys, looking for demand being respected. It's all the interaction between supply and demand, liquidity fueling these moves, and then we're able to use these points as either targets for other ends of trades. Because if we start to look this way as well, just to wrap up this video a little bit further, what we can see is we take liquidity. We even see a mini change of character within it. So if I just zoom in, because I'm sure that's micro mini for many of you looking. So let's just clear up those drawings and we'll zoom in this one more time. What we can see is we take liquidity above this high. And what we can see is fractally, we have a change of character. So we take liquidity here, take liquidity here. It doesn't matter which one you're looking at, whether we're looking at 4-hour more prominent structure, or in this case, more 15-minute structure. We can all agree that this high was successful in taking out this low. Therefore, that is a protected high. We can also look at this. We take liquidity, we get a change of character, protected high, because this high was successful in taking this low. I think you get the point. But what we can see now, if I just look at these points, we can use these. So if we're looking at buys down here, what do we see? Logical targets to look at. And again, like I said just previously, is even before we discussed this concept, we were already looking at these highs as a form of liquidity anyway. Looking at the concept of protected highs just gives us a little bit stronger targets to look for, because if we're looking at this, look at the reaction we get from these two protected structures. We actually get a true pullback. And we see deeper pullbacks as well. Whereas if we're just looking at little bits of structure here, supply for instance, we get small reactions, nothing crazy. We have a supply zone here. Yeah, we do get a bigger reaction. If we look at this, we have a set of equal highs. Do we get a pullback? No, we just get a pause and then it breaks right through. We look right here. Is this a structural point? Yeah. Could we say that this is a protected high? In theory, yes, but you'd want to start looking at things a little bit more logically. Yes, this would be on a 15-minute, but again, 15 versus 4 versus daily versus weekly, and so on and so forth. But I hope this video helps understand the concept of protected and targeted highs, how we can refine them a little bit further, how we can use supply and demand to begin to understand when a protected high or low might be invalid, because we want to see that swing structure actually get broken. But as we know, there can be a lot of distance between swing structure being broken, and if you're sitting on your hands for too long, you end up making poor trading decisions. So being able to have that insight as to what's happening on the charts so you can actually make trading decisions is what it's all about. And then finally, being able to use previously established protected highs or protected lows as logical target points, as from a internal and external range liquidity standpoint. But again, when we're looking at this, none of this is new. None of this is a completely surprising concept or anything like that. In the liquidity videos, we talked about all of this. This is just allowing us to refine our liquidity points that much further, because again, what we said is we had structural liquidity, we had trendline liquidity, we had a liquidity void, structural liquidity, trendline liquidity. We knew price was going to come. Now we can start to refine a little bit further, looking at these protected points, knowing that these are going to be areas that are for sure going to get run once the trend starts to shift. So I hope that's helpful, and I really recommend backtesting this, hitting your charts, and just really digging into this concept a little bit further so that you can understand. If this is still a little bit confusing or unclear, I highly recommend checking out the protected and targeted structure video in the market structure section, as well as the liquidity videos, and then revisiting this concept, as it really is the combination of everything in those videos into one video, as well as some of the supply and demand refinements. So this video definitely does add on everything that we're learning so that we can start to make better, more informed trading decisions.